In this video, traders, we're going to look at what are the most popular trading setups. Hey guys, warm welcome to you. All right, so what are the most popular setups? Now, this doesn't necessarily mean these are the most profitable in my opinion. I'm going to kind of give my opinion on some of these, but these are the ones that I find that most traders do from all kind of levels of experience, from brand new traders all the way up to kind of advanced traders. But advanced traders, I'll go to those in a second, but I think this is the most popular when you just look at, if you were to survey everybody in the trading community, these would probably be the most popular. So the most popular one, I think, without a shadow of a doubt, is breakouts. Because people are, well, first of all, you know, if we're not familiar, I assume you are, guys, especially if you're a subscriber, you're going to know what we're talking about here. There's our high and a breakout above our high. We're going to be buying this. This would be a long breakout. So we're buying a breakout to a fresh high above a resistance level, or selling a breakout to the downside. The point is, you're chasing the market in a way. Now, the reason this, I believe, is so popular is that it's the easiest trade to do from a kind of mindset perspective, right? The market's going up, you see momentum, you're constantly told the trend is your friend, you're constantly told that momentum is going to continue, and the textbook, probably the first thing you look at in a textbook, is a breakout. And many people are trading these breakouts. And also, there's the law of big profit opportunity, right? If you get on a breakout, you look back, you can cherry pick some perfect breakouts where you've had multiple weeks, multiple months, or multiple hours if you're day trading move, and there's been a substantial profit in it. So that's always in the mind. And the problem with breakouts is, in my opinion, and I believe that this to be true, I haven't got any stats to back this up, the majority of breakouts don't work. You know, in fact, you probably know the same. If you go back and look at your charts, in fact, just bring up your chart, favorite market, favorite time frame, and look how many times a breakout hasn't worked. Now, the key is that when it does work, you're hopefully making up for all the times that it hasn't worked. But the extra key with breakouts is to take them under specific circumstances. And I've discussed this before, but I feel that this is one of the most popular trading strategies out there, but I feel that most people get it wrong is because they take it every single breakout. So they'll take that when we're in a range, or they'll take that when it's quiet. They'll take breakouts that don't have the attributes of a genuine breakout. Now, appreciate you never know until it goes that it's going to be a breakout. And there are times when you get sort of benign looking breakouts that will just rep on forever. But there are commonalities and attributes with breakouts that need to be taken into consideration before you take them. Is it news driven? What's happened before? Where's the prior price action? All that kind of stuff. And I've gone into that deeply in other videos, guys. There's a link below for that, or there may be a link below. If not, go and check out the channel and have a look around. So breakouts are super popular because it's easy to understand. It kind of feels like the right thing to do, but ultimately it's most of the time it's a losing strategy unless you're very strict with the filters, in my opinion, and in my experience as well, guys. You know, I've been sucked into trading breakouts before. First started out, that was a kind of my go-to thing, and it just was a disaster. You know, you were taking them constantly, you're constantly getting faked out, or you'd buy it, you get stopped, you buy it, you get stopped, and the third time it would go. It just tended to be a mess. So being very strict and kind of then refining that process and saying, yes, breakouts are very useful and powerful, but under the right conditions. And now, under the right conditions, they are, you know that they're going to be, maybe you lose 3, but for every 1 that you get and 3 losers, you're going to get 10 to 1 back. So it's a positive expectancy. All right, number 2 is the buy at support, sell at resistance type trade. You know the score. This is the kind of, again, the second chapter of the basic traders textbook, and it's what a lot of people are doing. Market's coming down to support, they're buying it straight at support, goes up to resistance, they're selling it at resistance. So kind of the opposite of a breakout, but they're basically saying, well, while it's under it, I'll sell it, while it's above it, I'll buy it. Now, this is slightly better, and I think this is generally a positive expectancy strategy. There are obviously other rules and filters that would be the opposite of a breakout. You want to be in a range bound environment. You want to be where there's not much money flowing in, maybe there's no catalyst, you want to be in this quiet, all this kind of stuff. That's more likely to be a mean reversion type environment. So trend trading almost, or momentum trading, and mean reversion. This is kind of the theme really that applies for all strategies. It's bolting the right strategy into the right market conditions. All right, number 3, buying, selling pullbacks. So this is again probably number 3 in the list of your average textbook of trading strategies, buying pullbacks. And you know what? We're getting better and better here, because this is super powerful, and it's one of my, if not my top type of strategies broadly. Now, I've got rules that I will use as filters to really drill down to make sure I'm buying the right pullback, but fundamentally that's kind of the cornerstone and foundation of super powerful strategies, and used throughout all of trading right the way up to very significant hedge fund managers, significant prop firms. Now, you might say, well, hedge fund managers don't do that. Well, they do in actual fact, because often they're waiting to see before they're jumping on. They're waiting to see, they've got a thesis, they've got a plan, they're waiting to see that this thing is going to go. Now, of course, if they're managing multiple billions, it's going to be a struggle and they might have to just change the strategy completely. But a lot of hedge funds who are a little bit more nimble will have a thesis, and then they will wait to see, and then they will wait for a pullback after they've seen that initial thing. Then they will buy in. So they won't be chasing it, they won't be the first of the party, they'll wait. Just go and look at USD JPY back from multiple years ago. We're in that downtrend, we broke out of it, it kept going. That kind of consolidation, that little pullback after we had that, was when you saw a lot of funds who were getting involved in it, and we saw all the details and all the reports and stuff. You thought, okay, well, their average is interesting because it shows that they've really got aggressive at that point in time. So buying or selling pullbacks, super powerful, but again, in the right context, useless when done under every single scenario. And this is the theme with all these three guys, is that, you know, if you do them in the right conditions, they're powerful. If you do them or you trade them when the conditions aren't right, then they're not going to be super powerful. They're going to be, in fact, worse for you, the worst thing for you. And the final thing, which probably is the most popular one, is trading on a hunch. Now, I know this will be a bit tongue-in-cheek, but majority of trades are trading just on a hunch. They'll bring up a chart, and the trade will, they say, jump out of them, and they'll just decide to go long. They'll put an arbitrary stop in, and they'll have an arbitrary target, and they'll go in it. And we know, if you're obviously a subscriber, appreciate your subscription, but if you are, you know that, hey, we've talked about this before, guys. This is not the way to trade. We know that there is a kind of portion of the gut that we need to use and need to refine and adjust and adapt as traders. That's what gives us the edge as humans. But trading purely from a hunch, purely from the gut, especially in the beginning kind of early part of your career, then it just never serves you, because you can never get it right. So, and honestly, if you look bulletin boards, you look all through other things, you see social media, any of your peers who are trading, a lot of the time, especially if beginners, not necessarily, I think more intermediate and advanced, and if you're kind of in the intermediate or advanced level, you're going to know that that doesn't really serve you. But a lot of beginners, a lot of traders are trading from a hunch, that don't have a strategy, and they call that the setup, and that's the approach they're taking, and it never works for them. So there's four for you guys. What do you think are more popular trading setups? Have I got it wrong? Do you know ones that are more popular? Perhaps it's using something like indicators like moving averages, maybe it's stochastics, maybe it's the overbought, oversold type trade. What do you think is the most popular trading setups or strategies? Take care, whatever you're doing, bye-bye.